Should you be waiving your major contingencies when you submit your offer to buy in this hot market? Stay tuned, and we're going to discuss that. Hi everyone, it's Stephen Bloom, your real estate Sherpa with SherpaHomes.com, and today we're going to talk about whether you should waive the top 3 contingencies a buyer usually includes in an offer just because of the hot market. We're going to talk about the risk. Now, personally, I would never ask my buyers to waive any of those 3 contingencies without at least assessing the risk. So let's talk about that risk. So your inspection contingency is a big one. That allows you for a certain amount of days to come in with your professionals and take a look at the electrical, the plumbing, the appliances, everything about the house to determine whether you want it. You want to know what that condition is. If you were to waive the contingency, it means you're going to buy that house no matter what. Well, what if you find that the foundation is cracked and off kilter and it's going to cost $50,000 just to have it repaired? Well, you don't want the house. But if at that point you back out of the deal, you're actually backing out without a contingency in bad faith. You're going to lose your deposit. But if you kept your contingency, you can still cancel. Now, why would the sellers think this is a good idea? Because when you submit the offer, you're going to tell them you're not going to ask for any repairs. So you're going to take the house as is unless you find something major. You'll still back out, but you will get your deposit back. That way you mitigate the risk. Now, the second contingency is your loan contingency or your financing contingency. A lot of sellers today, they don't care about your financing. They got cash buyers, they got investors, they've got Bay Area people, all of that. So how are you going to not waive that contingency? It's easy. Go to your lender and get your pre-approval done. Go through the entire underwriting process before you submit an offer. And what that means is they're going to check all of your records, call your employer, determine that you're financially able to buy and stable, and they're going to give you a conditional approval. Condition on finding the right house that appraises, etc. So if once you have that, you can tell the seller, and your lender can tell the seller's buyer, these people have already been approved. They're going to close. Financing is not a problem. The good news is, generally once you've been through that process, you can tell the sellers you'll close between, 12, 14 days. That's going to help your offer rise to the top. Now, I saved the best for last. Let's talk about the appraisal contingency. In today's market, we've heard the stories. Homes are going 10, 20, 30, 40. I've even heard $100,000 over asking price. Well, does that mean you got to have all cash? You got to be rich? Well, no, but you don't want to waive that contingency because let's say the appraisal comes in $40,000 less than what you've agreed to pay for. Well, if you've waived that contingency, the bank's not going to loan on the amount you've agreed to pay for. They're only going to loan based on the appraisal, which means the seller's either going to have to renegotiate or you're going to have to walk away. If you have already waived that contingency, that's not good news. That means you are going to lose your deposit and it's going to go back on the market. What you can do is arrange to have extra money available to you. $10,000, $5,000, $10,000, $15,000, $20,000. That way, if the appraisal comes in kind of shy, $5,000, $10,000, $15,000 or $20,000 shy, you're still going to be able to execute and you're still going to be able to make up that difference. Your seller's going to appreciate that and it's going to make your offer much more palatable. So we have mitigated risk with your inspection contingency by keeping it in and telling the sellers that we're not going to ask them to repair anything. We'll only back out if there's something major. Two, the loan, we're not going to waive the loan or the finance contingency because we've already been approved. Now, if you waive it and you lose your job or something bad happens, you're going to lose your deposit if you waive that contingency. So don't do that. And most important, the third, the appraisal. I'm sorry, this is going to require cash. Either yours, somebody else's, but you don't necessarily have to spend it. Your appraisal could come in right at the mark, maybe even a little more, and you are going to be fine. So I hope that helps, explains how I counsel my buyers not to waive those three major contingencies. So if you want to have a question, a real estate question answered by me, let me know, and I'm going to make you a video. Just reach out to me at 916-647-7014. Again, I'm Stephen Bloom, your Real Estate Sherpa, and I'll see you next time.